So yesterday we started by laying the foundation for Forex because that is very important, especially for those who don't have any idea, excuse me, any idea when it comes to Forex trading. So we started from the basics, laying the foundation, and we define what Forex is. We're able to talk about the participants in Forex, those who are participating in Forex, and the opportunities that is available in Forex. And then we round off by talking about the types of movements in the market. And then we said we have the bullish movement, which is the upward movement or uptrend. And we have the bearish movement, which is the downward movement or the downtrend. And then we said when the market is not moving upward or moving downward, we say it is in a sideways movement. And before the end of today's session, I'm going to show us a screen of how this three market condition, how it look like. The upward movement, the downward movement, and then the sideways movement. And we also mentioned that there are two types of trend, uptrend and then downtrend. So we'll take it up from there. We also said that there are three major trading sessions aside from the Sydney. We have the Tokyo session, the London session, and then the New York session. And we said the best time to trade is in between the London session and the New York session. So if you were not here yesterday, go to the community, go to the group, and watch the video for a foundational understanding. So today we'll talk about the types of Forex analysis. That's how we are going to be starting up today because we'll be talking about setting up to trade. How do you set up to start your trading journey? Setting up to trade. There are different types of Forex analysis. How people analyze the financial markets, whether it is the currency pair they want to trade, or the commodity, or the indices, or the future, or even crypto. The same analysis is being used. And we have what we call the fundamental analysis, the technical analysis, and then sentimental analysis. Sentiment. But the two major one is the fundamental and technical. I'm going to talk about the two. I will forget about the sentiment. Sentiment is not really meant for us, so I won't dwell on it. But the two that we will be familiar with as traders, retail traders that we are. Remember I mentioned about um, the people who participate in the trading, and then we said the central bank, the commercial bank, hedge fund, and then the retail traders, which is you and I. So as retail traders, the analysis that we will be using is basically technical and then some splash of fundamental. The fundamental is not really what we use, but we only go into it to have an insight because there's a way the fundamental analysis tend to affect technical analysis. But majorly, as retail traders, we will be dwelling more on technical analysis. So we have two major types of Forex analysis, fundamental analysis and technical analysis. And then what is fundamental analysis? Fundamental analysis is trying to understand what is going to happen in the market using events such as interest rates, such as non-farm payroll, employment news, because from time to time, every week, some of these countries releases data. They release data on employment, they release their data on interest rates, they release data on retail sales, consumer production, and all of this data have a way of generating impact in the market. So, and fundamental analysis covers areas such as geopolitical, economic. For example, the war that is happening right now is affecting. Someone said it's not hearing me. I hope others can hear. If others can hear me very well, then that means it is your own network. I hope everyone can hear. Please, can you respond on the message box if you can hear me? Okay, good. So if you can't hear me well, then try to adjust your network. So the fundamental analysis is actually trying to understand what is happening. The major events that are happening is America going to announce their interest rate and what is going to be the impact of that announcement on the market when I'm trading. That's what fundamental analysis is all about. So those who use fundamental analysis to trade, they are people who take the market prediction using high impact news to determine how they are going to trade. So just like I said, the war that is happening right now in Israel, in Russia, is having a major impact, a very, very significant impact in the market, particularly on commodities like gold and oil. There is a big impact of the geopolitical tension on the commodities. Some people are really making money because they have a deeper understanding of fundamental analysis with technical. They have been able to marry the two together and they are taking advantage of, of what is happening right now. Now, technical analysis, which I mentioned to you that we will be more of technical traders because we are retail traders. We just want to be using historical pattern, chart pattern of history to predict what is going to happen. And remember, there is always a saying that history always repeats itself, and that is very true. So technical analysis traders are traders that predict the market using chart analysis, like taking price action in the area or using specific indicators like supply and demand, support and resistance, trend line, moving averages, RSI, and they are using this to analyze the chart. They are using it to analyze the market and then be able to come up with a prediction of what is going to happen in the market. So when you see somebody staying in front of a computer or just watching a chart on his phone, don't think he's crazy. He's actually trying to analyze the market and then try to use the previous charts of price action the previous chart of price action to determine what can happen in the present. I'm going to show you something now. I'm going to show you something on something that's happened yesterday and today. Okay, so yesterday I made some trade. Yesterday I made some trade. I'm coming. Now, if you look at the screen, this was what the chart looked like. And when you look at the screen very well, you will see XAU USD, USD CHF, XAU USD, and then you will see minus 55, minus 54, minus 55. Then you see something like 247, 277, 155. The one on red is the trade I made, which was on gold. It didn't go the way I predicted, and then it closed on losses. And then that same yesterday, I traded USD versus Swiss franc. It went as I predicted, and then it gave me some profits. And at the end of the day, I realized $471 at the end of yesterday. Now look at the screen and look at the charts. This is how technical analysis is being done. This chart you are seeing is the behavior of yesterday's price. What happened in the market yesterday? And then a trader who is a retail trader, who is a technical trader, will use the chart, will read into the chart using some indicators, using some of the tools he has learned, which is what we'll also be learning. Using some of the tools he has learned, using some of the indicators he knows how to use to analyze the market from the history of what has happened in the past, and then be able to determine what is going to happen in the present, and then is able to take advantage of the market. You know, I mentioned yesterday, if you remember very well, I mentioned yesterday that in trading, losses are inevitable. However, a good trader knows how to minimize his losses and then maximize his profits. Just like you have on the screen here, this trade happened yesterday. The history you have here happened yesterday. Look at the date, 7th of January 2025, which was yesterday. The first trade I made was on gold, and I predicted that gold should sell based on my technical analysis ability. However, it didn't happen the way I predicted. So it went against me and it hit my stop loss. Because when you trade, something is very important. I mentioned stop loss and take profit yesterday. You must always have your stop order and your take profit order. That means when the market doesn't go the way you predict it, this is the area you are saying when it gets here, it must stop. So it didn't go as I predicted, and then it went straight away for my stop loss. Now I went in again for another trade. I analyzed another trade, and then I was looking at USD CHF for a buy, and it went as I predicted, and it gave me an opportunity to maximize my profits. So I recovered not only the profits, the losses of my previous trade on gold, I also made additional profits on it. 278, 277, 155. And that was for yesterday. Let me show you the one for today. Let me show you the one for today. All right, today. Okay, so this is the result for today. You can see it here. Today, 8th of January 2025. I didn't experience any loss at all. I picked 3 trades, one on USD CHF. Okay, what happened was that I didn't close all my USD CHF yesterday. I closed the remaining one today. I left one position opened. I had another trade on Euro, Canadian dollar, and then another trade on gold. The same gold that kicked me out yesterday. I pick it again today, having analyzed the market and predicted the market. And on my Euro card, I had profit of $31, $31, and then on my gold, I had profit of $90, $90, and then my USD CHF of yesterday, which I closed finally today, I had profit of $143, and that's $476. So we use the charts to analyze the history of the previous price action. What happened in gold yesterday? What happened in gold last week? What happened in gold last month? So I am using the charts to monitor the behavior of gold today, and then I'm predicting the next action of what is going to happen. And if you are well trained, as you will be well trained in this community, you will be able to predict accurately, at least 80 to 90%, the direction of the market, the next direction of an asset or an instrument that you are trading. And then you'll be able to take profit and maximize the opportunity that is in Forex. So that is how technical analysis operates. That is technical analysis. All right. So now, in setting up your trade, one of the things you will need is a broker, because a trader will need a brokerage platform that will be the middleman, that will link him with the trading platform or the liquidity provider. Because in trading, we have what we call the liquidity provider. Who is a liquidity provider? The liquidity provider is like the bank. They are the one holding the fund that you are trading with. They are the one providing the price. They are the one providing the platform. And when you plug in your trades through your broker, it goes straight to the liquidity provider, and then whatever the outcome of the trade that you execute, the liquidity provider will give you the result of the outcome. And that is why we will always need a broker. You must have been hearing different names like XM, XNES, Octa FX, HFM, Pepperstone, many broker, and you'll be wondering, what are these people doing? What exactly are they doing? They are the one providing the platform, the trading platform, for you to be able to execute your trade successfully. They are called brokers. So you will need a broker. And as you proceed to learn how to trade, one of the things you will need to do is that you have to start by opening a demo account. So through the demo account, you will be provided with all the instruments, all the assets, the price, and then you will be able to start testing the things that you have learned. The broker will provide you with a virtual money on a demo. The broker provides you with a virtual money, and then you will be able to test your strategy. You'll be able to familiarize with the charts, familiarize with the indicators, familiarize with the asset, and then gradually you are getting to understand how it works. But don't worry, one of the purpose of the community is to guide you all through until you begin to trade independently all by yourself. We'll provide you with all the guidance you need, all the mentorship, all the assistance, and all the support that you need. Now, in choosing a broker, this is very important. In choosing a broker, there are three things you must watch out for. Number one, regulation and reputation of the broker. Number two, the types of accounts that the broker has. Then number three, the fees and the commission, the spread that the broker charges. How much do they charge? How much commission do they charge? And what is their spread on each of these assets or instruments that you'll be trading? The most important aspect is the regulation and reputation. There are thousands of brokers out there, but many of them have bad reputation and they can't be trusted. Ideally, a broker should be regulated with a financial body so that they can be held responsible for your funds when you make your fund, you deposit your money into their account. So before you choose a broker, you must look out for a broker that is regulated, well regulated. And then you must also find out if that broker has a good reputation or not. If the broker is not having a good reputation, that means people are making complaint. You must find out if people are actually complaining about that broker, about maybe people are complaining about withdrawals, it's delaying, it's not possible, or people are complaining about their spread, people are complaining about their commission, then it is a red flag. And I'm going to show you something, how to know if a broker is good or not. Just hold on. Let me show you a screen of how to check, excuse me, if a broker is good or not. Now, how do we know if a broker is good? How do we know if a broker is good? Now, let's say you already know this broker. Somebody said, make use of this broker. The first thing you need to do is go to Google and then put the name of the broker in the Google. I'm going to use three brokers as an example. I'm going to use, okay, I know Pepperstone, I know GGCCFX, and then I know XNES. Now, I'm going to tell you something about these three brokers. First one, let's say Pepperstone. Go to Google and put Pepperstone. Now, when you put it on Google, what you should be looking for is review. Review. And if on Google you can't see the review, now go to WikiFX. WikiFX. Yes, WikiFX. Now, when you go to WikiFX, you will see somewhere here, they will say, enter the name of the broker. Enter the name of the broker. Pepperstone. Pepperstone. Now, this is the Pepperstone. Look at their score, 7.95. Then click on it. When you click on it, then you will see some more information. Pepperstone is regulated. They are regulated in Australia. Do they have full license on their MT4 and MT5? Yes, they have full license. That is what we have here. And then are people complaining about them? Can you see it here? Risk alert. The number of complaints received by WikiFX have reached 29 for this broker in the past 3 months. They are regulated. Yes, they cannot run away with your money. That's what it means. However, people are complaining. It could be maybe as a result of their spread or as a result of their commission or any other complaint. So you need to find out. So let's go to another one, GGCCFX. Now, I used to work for this broker before, but I left the company because I later found out that the company is not a good company. I have recommended this company to a lot of people before, but when I find out that this company is not a good company, I have to tell everybody I've recommended to withdraw their funds immediately. So let's go to GGCCFX. Where is it? GGCCFX. Aha. Here we are. Let's look at their score, 2.0. Very poor. Very, very poor. I was with this company before, but I left. Now, look at no license. The license has been withdrawn. So right now, they don't have license. If anyone puts money with this broker, that money is not safe. They can run away with the money. Look at it. No license. Suspicious regulatory license. Their score is very poor, 2.0. It has been verified that this exchange currently has no valid regulation. Please be aware of the risk. They will run away with your money. This was the reason I left the company. They actually called me to come and help them train clients and educate clients on how to trade Forex. But when clients started making complaints, I was hearing complaints here and there. Then I went to make my research, not only on WikiFX. I went to make my research on other platforms, and I discovered that they don't pay their clients or they will withhold the money. So once a broker don't have license, run away, stay clear from that broker. So let's look out for Xness. Xness. Okay, so this is Xness here. Look at their score, 8.3. Very, very good score. They are regulated in Cyprus. And look at all the details. Their benchmark is A. They have full MT4 and MT5 license. That means they are not white label. So if I'm going to recommend any broker to anyone, I am not working with Xness. Let me make that clear right now. I am not a staff of Xness. I am a full-time trader. I have worked with liquidity provider, and I have worked with several brokers before, and they always call me to work with them in education aspects, marketing and education aspects, to train their people. I have been a trader for over 4 years now. I am not working with Xness. However, if I am going to recommend any broker to anyone, I am going to recommend Xness. So one of the things we will need to do as new traders is to open an account with a broker, and then we verify the account, and then we open a demo account. That is going to be the next step. So you can go to our group in our community. You will see the link on how to open your Xness account. You can go to our group, and then you will see the link right there on how to open your Xness account. So just follow the link, click on the link, and then it will navigate you to how you can open your account, open the account, verify the account. And one of the interesting thing about Xness is that their deposit and their withdrawal is very, very fast. Withdrawal is in between 3 to 5 minutes. There are sometimes I go to groceries, I want to buy things, and I don't have enough money. I just go straight to my broker platform, and I make my withdrawal right there. I get the fund immediately, and I'm able to pay for my groceries. Their spread is good, their commission is good, they are very transparent, they are everywhere. Easy platform to deposit. You can deposit even from your local bank account. You don't have to buy crypto or use card. You can use, for those in Kenya, you can use your Momo. You can use, they have different easy platform to make deposits. At the same time, easy way to also make withdrawals. So open an account with Xness, because you will be needing to open a demo account, and then we will start, we will continue from there. So to end today's session is that you need to create a good trading environment. As you're about to start this journey, one of the most important things you need to do is to create a trading environment. You will need good internet. You will need a good computer. At least you can use your phone. However, using a computer is very, very good, because you'll be able to see the chart clearly and be able to analyze the market very well. Number 2, you will need a trading journal for record keeping. Please take this one very, very important. You will need a trading journal. This is very, very important. So you need a trading journal to record all your trading activities. And then number 3, which is very important, you will need a disciplined mindset. If you are not a disciplined person, or you cannot cultivate a discipline,